CBDCs versus stablecoins. We couldn't live in a more vibrant and exciting times to see what's happening in the digital assets. We got some really exciting speakers here. Because they're all working for high-level banks, they express their own opinion to avoid any conflict of interest with banks. Saying that, here we go. We got Mariana Gomez de la Villa from the ING. We got Francisco Rivadeneyra from Bank Canada, Marion Laboure, Deutsche Bank, and Thomas Otendal from Saxo Bank. One of the things I want to start with, and it's quite interesting, is that the last news I was reading is that the Standard Bank and Shinhan Bank are actually trying out stable coins towards together, backed against their national currency. And Mariana, I think it will be great if you can give us a head start by giving your opinion about that.
Oh, the news, you mean?
In the news, yeah.
Yeah. Well, I believe obviously that stable coins, given they are programmed in distributed technology, give you some opportunities that you can definitely think of when you think about, for example, the role of the balance sheet in a bank business model, the role of programmability, for example, for certain business models, right? The world is changing, as you mentioned, and what matters to us, I think, is thinking about what opportunities do you have in case of you wanting to program actually the use of any given coin, you know, or in this case, a token, you know, making sure that it's stable, that you have proper collateral in place, so then you can guarantee that actually, you know, people can use it for the purpose that is intended to. And with that, obviously, it opens up opportunities as well for specific, for example, merchants or partners or clients even to change their business models, to change the way they actually currently operate. And changing that as well, you can change, you know, and evolution, have an evolution on the way actually people behave in the matter of financial health. So I think this is a great starting point actually for the conversation, you know, opening with such a news, because pioneering in these kind of aspects, it always takes a risk, but it also have an opportunity. And in this case, yeah, I wonder how far are they going to arrive?
Excellent, Mariana. Marion, just to chip in, what do you think about pegging against national currency?
What do I think about CBDC, national currency? Yeah, that's a good question. I think what we have seen over the past few years, and especially since early 2020, is the rise of CBDC. And what is very interesting is that when I joined Deutsche Bank 2 years ago, when I started covering CBDC, very, very few people and clients were talking about CBDC. Last year, more and more people have been looking at CBDC, thinking about what was this thing and so on, especially when China started doing the pilot test with the Riksbank as well. More and more people were looking at that in a strange way. Is it something which is going to happen or not? And this year, it's completely different. I think no one is doubting that CBDC, it's something which is real. It's very likely that China is going to launch its CBDC live in February next year. And more people and clients and internal and external stakeholders are thinking about how to react. What does it change for clients, and what are the best way to move forward? So there is a real acceleration in terms of questions, in terms of implementation. Nearly no one doubt that this is something that will happen. And the next question is when, and no longer whether or not it's going to happen.
Oh, excellent, Marion. Thank you so much. Francisco, what do you think about the regulatory framework towards these type of solutions?
Hello, Michael, and hello, everyone. I will still reiterate the disclaimer that my opinions are my own and not the ones of the Bank of Canada. But with that out of the way, probably to answer your question, it's good to put a more fundamental question. I think what we have in front of us is the following question: what is the role of private versus public money in the monetary system? I think that's fundamentally the question we have between CBDCs and stablecoins. And to be able to answer that more fundamental questions, we have to ask, what has this new technology brought? Has it changed the trade-off that we have today, in which we have a coexistence of forms of central bank money with private money? For example, we have central bank reserves used for settlement of interbank transactions mostly, and cash going into the hands of individuals mostly for a purpose of universal access, right? So a shorthand for this new technology, I'm going to call it programmability and tokenization, right? And what does it fundamentally do is changes the business logic of a record keeping system. Now, the record keeping system in a DLT, for example, in a tokenized asset, can reside outside of the ledger that is controlled by the entity that issued it. So this type of interaction potentially changes the trade-offs. But my opinion is that there's nothing new under the sun. In reality, CBDCs and stablecoins will have to cooperate as part of the principles of the CBDC coalition of the 7 central banks that issue that one of the principles for CBDC should be the coexistence of public and private money. So our opinion is that there's nothing essentially different in terms of the trade-offs between having public and private money. The only thing we have to figure out is what is the best regulation to ensure that this cooperation and this coexistence is best geared to fulfill those two aspects that we need fundamentally, which is settlement of interbank transactions, but also universal access to new forms of money without discriminating for different groups.
Excellent, Francisco. Thomas, over to you. How would you then classify digital currency as if it is a CBDC or a stablecoin?
Well, I think it's for now we would stable coins to me is like further ahead of the CBDC right now, because as we know they are live on certain blockchains, and it's a well proven proof of concept, so to say, that it takes out unit cost, it takes out settlement risk, it takes out these typical intermediaries that we have in the current financial service space. I believe that eventually we will have CBDCs that will take over from the stable coins. I personally think 2022 is going to be an exciting year where you see a lot of maybe smaller countries starting to float these CBDCs, and then you would start to see these efficiency gains across the entire system, not only cost-wise but also inclusion-wise and more transparency-wise. And so of course there are some issues that CBDCs needs to cater for that maybe stablecoins don't, which is like privacy, AML issues, interoperability between countries, and these things that needs to be built in CBDCs. To me, stablecoins is only a way of moving from one asset to another asset in real time. And then, of course, today stablecoins are, as you say, private money, and you have a credit risk on the issuer, but that could be mitigated pretty easily through assets in asset-backed stablecoins, right? So yeah.
Thomas, can you elaborate a little bit more what you think it would mean in trading in the capital markets?
Yeah, so if you look at the TradFi or traditional finance versus the let's call it the decentralized finance or kind of the digital asset space, I think they will kind of work as a hybrid model for some years. But eventually, I think the digital asset space will win because the efficiency gains there are so massive compared to the traditional world. Again, intermediaries like clearing agents and settlement agents and custody providers in the traditional world can't do this as cheap as it can in the digital world. So you would see companies like Tesla and Google, tokenize their equity instead of having as traditional assets. And so they will be running on some sort of blockchain or DLT, private or public ledger, right? And settling initially in stable coins and eventually in CBDC.
Excellent.
So
Thank
I
you so
think for the
much.
client, for the end client, there's not going to be a massive difference in client experience or on user in UIs, but in the back end it will be a massive difference.
Yeah, I understand that. That will definitely make a big change. If you look at the change in trading, and we'll go to Mariana, what do you think will happen to the monetary ecosystem with central parties like SWIFT?
I think they have been obviously eyeing the technology because of the efficiencies promises, right? That everybody is assuming so far, and only a few have actually validated those assumptions. So I think they are in the works. They are actively, participating in different proof of concepts and things like that. But yet they need to realize as well the amount of investment, right? That something like that would mean for the ecosystem. And it's not only them, like parties like SWIFT, for example, that have based a lot of their systems on that, passing on the messages and that standardization, but it's also all the institutions around it and all the financial market ecosystem that has built upon those standards, right? So it is a huge effort that the financial industry will have to undertake, and we will have to finance that. We will have to invest on that if we really truly believe that that's the way to go. Which I think, it's no matter a question of belief anymore, but little by little it's been proven, right? I think, for example, the opportunities that it gives you, and I would like to refrain from saying, cost savings, for more like efficiency findings, let's say, or friction hunting, as others will call it in the innovation ecosystem, right? I cannot imagine anymore, for example, being a stakeholder or having an option or having something, and then having to keep it in paper and then put it on a safe, and then having to, hire a security system in my house, so then someone will not come and try to steal my safe. It seems not anymore from this world, and for example, I cannot even print a paper anymore in my computer right now, working from home after COVID, right? So why do we expect still institutions like us, having to print these files and having to sign everything on weight signature and having to, so it doesn't make sense anymore, and we're 2 years off from what we knew. So I think in terms of opportunities, they're endless, and I can see several in so many different customer journeys, as we call them, at different levels as well of the financial market infrastructure, as I mentioned. So it's just a matter of really putting our money where our mouth is, right, and going for it as an industry.
Oh, excellent. Marion, to make a bridge towards you, we all know that in the financial industry, we got the primary market and the secondary market, and a lot of things are changing. Where do you see stablecoins fit into that market, and where do you see the CBDCs thriving?
That's a good question. The thing is, my personal opinion, and as Francisco mentioned before, is that yes, there is a kind of competition between crypto and CBDC. Crypto and stablecoin might be a little bit more advanced compared to CBDC. But regulation is going to be the big turning point. So far, we clearly lack regulation in Europe and in the US, in Western economies. And I think we could have some regulation in place, probably like from mid next year to early 2023. Things are getting postponed on a daily basis nearly, so it's very hard to get with a very clear deadline, but it's what we expect. Regulation is the big turning point. We conducted a survey. We have interviewed over like 200 CFOs and treasurers, and most of them are a bit reluctant to adopt cryptocurrency and stablecoin for two reasons. The first one is volatility, and the second one is regulation. Volatility, clearly this is a very, very volatile market for few reasons. First of all, it's not very liquid compared to the euro, compared to dollars. Bitcoin remain extremely unliquid. The second reason is the supply and the demand. We have a limited supply and clearly increasing demand. So prices are getting pushed higher and higher for Bitcoin. And the third reason, which that I mentioned previously, is regulation. Regulation, I think, again, is going to be a good thing for the market. If we have regulation, I wouldn't be surprised if more corporates are adopting cryptocurrency. And if we have more corporates, more consumers adopting cryptocurrency, it means higher demand, higher liquidity. And if we have more liquid asset, it results basically in a lower volatility at the end.
Excellent,
can I say something, Michael? Because I think
jump in.
Yeah, what I'm struggling with is again, we really need to be clear on the why, right? Why are you doing this? Whether you are a central bank, whether you are a private institution that is issuing, private money, whether you are a fintech, whether you are, and why are you adopting? Why are you issuing? Why are you? This will tell you exactly what kind of problem are you solving, and they're relying as well of what exactly do you need, right? If you're a central bank and then you are in the role of maybe thinking about central bank digital currency, you need to also ask yourself why. And if you really see different central banks are at different stages with that question, right? Some of them already know why they want it, and some of them they don't even know. They are even eyeing it only from the FOMO perspective, right? So I think that will also differ whether you are talking about a central bank digital currency, which will be public money, or whether you're talking about a stable coin, which is private money, or whether you're talking about a cryptocurrency and the adoption of cryptocurrencies, whether those are volatile and blah blah blah. No, so the why is the most important, I think, elements that you have to consider when talking about all these different terminology and aspects of the adoption.
Yeah, I make jump here on regulation. And sorry, Michael, I didn't answer that original question at the beginning, but there, as Marion said, the regulatory landscape right now is moving very fast and it's complicated. But if I could break it down in a couple of pieces, it would be the following. So I think on consumer protection, most countries, most advanced countries have already moved forward, requiring exchanges to do KYC, AML, CFT. So that's, I think, one first piece. The part that is still unclear, and I think that's what Marion was referring to, is what's the treatment? What's the regulatory treatment of the stablecoin arrangement? Is it a narrow bank? Is it something different? Should it be tied up to a bank that has access to the central bank, right? And I think different countries are taking different approaches. There's consultation processes that have to be had. But of course, there's always that balance of the regulators that you don't want to break what it's not broken. You don't want to fix what it's not broken, but you don't want to hinder innovation, right? So it's that fine balance that we have to figure out, and we're doing that process, right? So at the same time, I think potentially the entry of big tech, for example, into payments changes the landscape, right? For two economic reasons. Well, if you think this is simply a narrow bank, a global stablecoin is simply a narrow bank, that's all good and fine. There's nothing new under the sun. But if you plug it into a customer base of billions of people, there might be a very different regulatory landscape that have to be addressed here in terms of how's the data used, what's the business model, and where's the monetization of potentially of the data, for example. So I think maybe as you have said here, probably there's going to be 6 months or to a year before we have that final clarity, but it's undergoing. Also, I would add, for example, that the FSB through the BCBS has already given open consultation to the industry to understand how the treatment of crypto and stable coins in the balance sheet of financial institutions should be treated. That's one big piece. And the other one is the CPMI has given additional guidance on the PFMIs on how to assess the risk whenever in a financial infrastructure having to deal with crypto and stablecoins. So I think there's progress in the international arena and also in the domestic ones.
Thanks, I really appreciate it, Francisco, and please do keep chipping in. That always helps the conversation. Thomas,
so I would like
going
to,
over- oh,
just
going over to you, yeah.
a comment on the why from Mariana. I think one of the reasons why you see countries in the Caribbean and also now South America and Southeast Asia starting to adopt CBDC, and they will probably come out here in 2022. I think it's also a matter of government revenue, right? Because once you have wallets and you have CBDCs, you have a much more controlled economic society. Your taxes will be much more reliable. You would have your revenue from a tax perspective to go up, right? So I think there's a huge benefit for the governments to implement this. Then you can talk about privacy. Should it be retail or wholesale? And what about AML and stuff? There's kind of some things that needs to be designed around that. But I think from a cost-benefit analysis, tax-wise, this is going to be a really, really big thing for a lot of economies, also here in Europe.
Yeah, and actually, Michael, if I can jump here as well, I also wanted to jump and follow up what Mariana just said on the why. I think there are various motivations, as Mariana mentioned, to issue a general or retail CBDC. And these reasons differ by countries. So Western countries have different reasons to issue a CBDC. They can have like a lot of different reasons. Some of them want to have a CBDC because monetary policy implementation is more efficient. Others have mentioned financial inclusion, payment efficiency, payment security, financial stability. So we have various reasons. And if we look at these reasons, they differ significantly between countries, between regions. China started exploring CBDC very early in 2014 for financial inclusion and because they wanted to fight cash. Cash is mainly used for illicit activities, trafficking, and so on. So they have in mind to replace cash ultimately. And if we look at the reason why we are doing that in Western Europe, it's probably more for payment efficiency. And if we deep dive on so this is for the why, and if we look at the how and what's going to be the result, my personal view on that is like the implementation is probably easier for emerging economies rather than advanced economies for a few reasons. First, if we look at China, for example, they started very early, so early 2000 to adopt digital payment, so mobile phone payment. Alipay, which had started in the 2000s, while it just arrived in the US, for example. They benefit from a younger demographics, which are more likely to use, they are more tech savvy. They also basically skip the credit cards, so they move directly from cash to mobile payment, and mobile payment is far more convenient than cash. While in Europe and in the US, we are used to pay with our plastic card, and moving from the plastic card to our smartphone, it's not much more convenient, I would say. So it's probably more tricky, at least not an obvious move. And probably the last reason that I would mention as well, it's the level of interest rates. Emerging economies have higher interest rates, central bank interest rate, while in the US and in Europe, we have a lower interest rate. So basically, if you are paying via a CBDC, it's more likely that you will still have a bank account at the commercial bank because you have interest rate revenue, which is much higher given the level of interest rate in emerging economies rather than in Europe or in the US.
Thank you, Marion. I really appreciate that. And please keep chipping in the conversation. I want to go back a bit to the volatility. In 1862, the US dollar was launched and was very volatile. Is this not a timing to start completely over? Francisco, would love to hear your opinion.
Well, that's a tricky question, and I will answer with the same principle that I think I mentioned at the beginning, which is there is a principle of coexistence between public and private money. So the central bank could not be tasked and should not be tasked with be the sole issuer of digital money. For several reasons, but the most obvious one is that the central bank couldn't actually build all the applications and deal with the public to actually provide them with all the innovation that we now expect in the digital world. But on the other hand, we shouldn't allow, and the financial ecosystem and the monetary system shouldn't be only provided by private money. The trust in a monetary system is underpinned by the lender of last resort function of the central bank, by its credibility of keeping prices and financial stability. And that requires the issuance of a form of settlement asset. So that is at least a interbank mechanism like RTGSs. But then again, the question is a CBDC part of that financial infrastructure? My personal opinion is that yes, but there's still big debate about that, of the necessity of this retail form of digital money in the new era. One scenario we can think about is, do we see a world in which programmable money needs a CBDC, or can all of that reside in stablecoin arrangements or in DLT, public DLTs, for example? And the debate is still out there, right, about the necessity. What are the market failures that a CBDC would solve that couldn't be solved if there were only programmable money that is private, for example? And I think that's the debate. So sorry, I cannot give you a straight answer on that one, but
Great
we're just
debate.
examining the trade-offs.
It's a great debate. And Thomas, can you chip in, especially on the trust part? I'm very curious about your opinion on that one.
Yeah. So trust on you know, we have crypto and we have stablecoin, right? And for stablecoins, I think, you know, it's relatively easy to create some trust. I know there has been some issues on the, let's call some of the dollar stablecoins lately, you know, but there is some pretty easy ways on how to collateralize these stablecoins so you can make them trustworthy. So that kind of depends on what kind of assets you have behind these stablecoins. But on the other hand, I also believe that when you go into CBDCs, so would you have so to me, one of the key foundations for this system to work is that we have digital identity schemes that works globally, and so that we kind of have the ability to kind of you know, understand who are we dealing with, how can we do AML. But still, on the other hand, how can we, you know, make it private? At least here in Europe, you know, we are very much into privacy, and so you don't want everybody to know what you are doing, but what you would like them to know, that what you are doing is actually okay, right, and within the boundaries of any legislation. So I think it's about, you know, governments all, you know, have the trust they have. So the CBDCs will be just like fiat currencies, trusted with the government backed. On the stable coins, I think you would need to have some security sitting in the back end as collateral for these issuances, if you are allowed to have them to sit in your wallet like normal coins, right, or normal fiat currencies. So I think it's about collateral, and yeah.
I think here we're coming into the bridge of use cases, and I want to go back to Mariana. Like, for example, I need an extra loan, so why don't I give tokens on my own name, Michael out, which is my stable coin with my my house as a collateral? Is that then the way we see the future, that we create our own money, or we do keep it centralized with CBDCs?
I think in the case that you mentioned, no, because I don't know you and I don't know if I can trust you, and then you are giving me a token on your collateral, so not on yourself, right? So if you would have, for example, the typical applications where you are indeed issuing a token on what my worthiness is as a person, right? In case of you know, influencers in social media that are these platforms already live and kicking, you know, then it's another thing. But then you need to indeed put yourself as a brand. And then, you know, depending on how much people think you're worth, then is what you can actually, loan against, right? Yeah, there are different applications. I think I found really interesting, for example, what AIB is doing with that programmability of the money, right? And making sure that money is spent for what is meant to be given to people. And I think those experiments are quite beneficial in certain economies, right? In economies when you see, for example, people again misusing those funds for other purposes. Having said that, for example, I'm Latino, right? I come from Mexico, and when you were talking about trust and the trust that you must have in the central banks and in the monetary ecosystem, you know, it really hits close to the heart, because I know a lot of people that do not trust their own governments, let alone some institutions like banks or financial institutions, and let alone, you know, the reason why we're having actually this conversation, right? The reason why Bitcoin was created. So it is indeed essential, and I don't know if there will ever be an answer to that question, but it's indeed the trust at different levels what we need to tackle, and again, you know, answering the question of the purpose of you doing what you are doing, right? And the role that you want to play.
It's actually
I might jump in here.
If I can just jump in here, I read a report some years ago now, a future studies report, where it was actually only Denmark and South Korean that trusted their governments more than Facebook. And that's actually fun. You know, when we go into this discussion around Diem and the Novi wallet and all that stuff, does that still apply? Because then governments have a problem, right?
Oh, absolutely. Great chip in, Thomas. Francisco, please chip in as well.
Yeah, I guess your question was provocative and actually illuminates a few of the issues that we have around the crypto and the DeFi ecosystem. In my opinion, up to this point, DeFi hasn't proven, except with the NFTs, that it touches the real economy, right? And in certain extent, NFTs is still digital world, right? Because you're buying just some digital asset in any way. So I think the question that we need to answer, and of course it's going to take a few years, if not a decade at least, is how we're going to solve the bridge between the digital world in which you can do programmability and very fancy stuff, and the bridge to the real world, right? And that's usually called the Oracle problem, is who can tell Mariana that you've actually put a lien on your house that is representing that digital asset. That would be the only way she would trust to take your stable coin. But until governments or the land registry is not in the blockchain or in some type of blockchain, I think that bridge is going to be very hard to close. And this is just one example, right? DeFi is growing quite a bit, but if you allow me to say, it's mostly insular, right? Is you buy stable coins against another crypto, and then it's just all circular. And there's very little that actually touches the real economy, as I said, the NFTs at the moment.
I think that's one of my biggest questions in general, Francisco, and I want to ask the question to Marion. Money is a trading mechanism, right? That's the basic human behavior, that we have something to trade with. So fish and bread, I cannot bake more bread, the other one cannot catch more fish. So let's trade it in a barter deal. And money is a means, a mechanism to use that. That's why we think CBDCs has an important role on the one hand side, and on the other side, stablecoin might take over a part of that role in that economy. Marion, how do you think the trading mechanism should be?
That's a very good question. First, I just wanted to bring two remarks on what has been said previously. I think you had a question on volatility and Bitcoin and cryptocurrency. And on that point, you ask if it's going to be better looking ahead. I would say so, because first, it's not a liquid asset. So again, the liquidity is very low. Most people who are investing in Bitcoin and other cryptocurrencies as well, they do that with a speculative purpose. So clearly, it's for speculation. Very few have already paid with Bitcoin. And the third reason is probably regulation will help as well to increase liquidity and then to decrease the volatility. And on the point about trust that Mariana mentioned, I think, yes, trust is important. And just to follow up, I think Thomas just mentioned that the trust in government and central banks is probably the highest as well when you surveyed people. We did conduct a survey. Then we have commercial bank, and at the end of the spectrum, so we have the GAFA. So having DM as the next global currency, I have personally some doubt when we see the result. Having said that, everyone has downloaded Google and the map and all these apps on their smartphones. So maybe I'm wrong, and maybe given that it's very efficient and convenient, more people will use it. But the level of trust is very low. And sorry, to go back to your question, Michael, about the tradability. The way I see it, tradability between CBDC and stablecoin or crypto, cash has clearly been declining. This is not true. In Sweden, cash as a mean of payment has been declining since 2007, 2008. And the pandemic has also clearly accelerated cash as a mean of payment. So more central banks are looking for some way basically to digitalize cash. And I think CBDC and cryptocurrency will probably coexist. Looking ahead, and on one side, CBDC, I would call it like the public digital cash, and cryptocurrency, the private digital cash. And I would be surprised if cryptocurrency are too successful that they are becoming global. We saw recently in China that they are about to launch their CBDC, and they have banned Bitcoin and other cryptocurrency. And this is not surprising because there is some global threat as well in terms of monetary. Central banks are ultimately the lending of last resort. So I wouldn't be surprised if they are becoming too successful to have probably a stricter regulation.
I just wanted to give two remarks to Marion's comments. I think on the coexistence of cash and CBDC, my impression, at least, and the Bank of Canada's statement, is that cash will be supported for as long as Canadians demand it. And that means that CBDC is not intended as a substitute of cash. And why? That's very important, because one of the main motivations of a central bank of issuing a retail form of money is universal access. In Canada, we have a 98% adoption rate of bank accounts. So almost every adult in Canada has a bank account, but it's still very important to have that universal access. No one can exclude you from receiving cash in a transaction. It is very resilient, can be used offline in situations like outages, no network. So the universal access, not only in terms of the economics of having to pay for a bank account that might be a burden to some households, but also its resilience. So being able to use money in any situation. So we will support cash for as long as necessary. And I think that might be also the objective of many other advanced economies. Now, it can be a response of decline of cash, that you want to get ahead of the situation in which you have a cashless economy, and that might be hurting some folks. It might have severe distributional impacts on some, so you might want to get ahead. So that's quite important. And the other aspect in terms of remittances, for example, and this use case that some global stablecoins, in particular Diem, is trying to play, right? Well, if it ever is issued, it tries to play in the cross-border transfers, in particular remittances. Well, that's all good and fine, but also we have to recognize that there's quite a bit of work in the G20, led by the CPMI, of looking at CBDCs as a building block to improve the efficiency of cross-border payments, right? So imagine if you were to have a CBDC in two countries, potentially that would be easier to create arrangements, of course, with potentially private intermediaries to arrange cross-border transactions for remittances. So the agenda, the international agenda, is also moving in that direction, but also on the regulatory side for stablecoins. So stablecoin arrangements will have to be compliant in the sending and receiving countries, right? For also consumer protection, money laundering, CFT, etc.
And one more point, if I may, on what you said, Francisco, cash is also far from being removed, because we have 1.7 billion inhabitants which are financially excluded, and they are relying on cash.
Yeah, a lot of,
That's in the US, no? Because obviously in the Nordics, that's not the case. So
worldwide, 1.7 billion worldwide, yes.
okay. But yeah.
And half of them have access to a smartphone. That's also one of the reasons why central banks are looking to develop CBDC. But the other half don't have access to a smartphone.
But Marion, if you look to, for example, the Bahamas, where they have the sand dollar, right, the first one. So one of the reasons they implemented this is, I think they have like 100 or 150 islands over there, right? And there's a lot of people living very remote, and they have difficulties, you know, with the fiat cash handling, right? So for them, it's much easier to have the sand dollar and a wallet, and kind of be able to move money around between these different vendors across islands. So that's also one of, you can call it inclusion, but you can also call it, you know, an easier way of living for them.
Yeah, definitely.
So adopting cash is like, maybe it's going to be leapfrogged, right? And they go directly to digital, like cash, stablecoins, CBDCs, and wallets.
Because we cannot forget how expensive cash is, right? So, for example, you were telling Francisco, you know, that yeah, as long as the people like it. But for example, talking about indeed the Bahamas, where it has several islands, and you need to have an ATM. You need to move the cash from a specific location all the way to a bank potentially, because otherwise you might be, you know, armed robbed or whatever. So yeah, cash printing, cash custodianship, cash transportation. All this is so expensive as well that indeed, as Thomas mentioned, I do believe that it might be cheaper. Besides, obviously, other opportunities, such as, for example, maybe you don't need that much surplus on deposit, for example, for the reserves of the bank, or you can engage with new generation of retail consumers, right? The ones that are just gaming right now and that they don't have a country anymore, you know, when they are playing any of these platforms, etc., etc. But not to go into
it's really good to address, Mariana. It's one of those essential things as on a consumer level, so the retail level. You as a consumer might want to have multiple choices. You might want to have gold. You might still want to have other type of assets, and then fit in CBDC or stablecoin, yes or no. That is a good question, also from a privacy and data perspective, and it will be good that everyone gives their opinion about that as well in the last 10 minutes we have to go.
If I may start, that only adds on to what Francisco has been saying, right? That there needs to be a coexistence, because one cannot substitute the other. And there are for different reasons, not fungible. No, you cannot substitute them, sorry. They're fungible.
And on privacy, Mariana, privacy and data?
Well, to be honest, in that sense, yeah, living in Holland, I'm having adopted the Calvinistic culture, you know, transparency. I have nothing to hide. I don't mind what you look at, right?
That will be a good question, because that's going to be different in Mexico. But I'm going to ask Thomas the same question. What do you think about that, Thomas?
Yeah, so in Denmark, we have digital identity, right? And it's kind of linked to everything you do in your life, everything from mobile payments to your house loans, to what, you know, if you want to have a COVID test or a vaccine or whatever, you have to sign in with your digital identity. So I think this will be part of that will be part of the foundation of any kind of wallet structure. So you can say today, where you have wallets with with public addresses that has like 36 like characters, and you don't know who sits behind these wallets, that will change. And you will get like it will be very transparent. You will get your name on your wallet just like you have on your bank account. The thing is with your wallet is that you can store all asset classes, all digital asset classes. So you can have your mileage there, you can have your food coupons there, you can have your stable coins there, you can have your CBDCs there, you can have your house tokens there, you can have everything sitting in a wallet, and you control your entire financial life from there, right? Which also means when you have your digital identity within that wallet, you would also be able to go out and say, I need to fund 10% of my house because I need to buy a new car or whatever, right? And then everybody knows this is 10% of Thomas's house. Who's gonna do that cheapest, right? So I think privacy-wise, for me, it's also very transparent in Denmark. You know, the authorities know everything I own and everything I have. What I don't like is if money is not like fungible. So in the sense of every piece of CBDC has a number, so you know where exactly they are, and you can do something about them. Maybe you can burn them, or you can mint some extra, or you know, this ability to do that in a private wallet is that kind of privacy I would like to control myself.
But if I may, Michael, ING has been working for the last at least 5 years on zero knowledge proofs, actually, and addressing exactly that problem, you know, the privacy problem. So as Thomas mentioned, you know, on the creation of digital identity, or self-sovereign identity, as we would like to call it, in the creation of central bank or any token, you know, you can have validations of something being true without you actually disclosing any of those privacy aspects that you don't want to disclose. So you, for example, can make a trade and you don't have to disclose the price at which you acquire, you know, or from whom did you acquire that specific asset. I can disclose that I have access to a service without disclosing my age, where do I live, so privacy, I think, to be honest, in a certain scale has been solved. So I wouldn't worry about that being an issue.
So Thomas, your description of that world, beautiful world, reminded me of Douglas Adams' Hitchhiker's Guide to the Galaxy. There's a reference of a device called the Identities. So Google it, you'll find it. It's this device that will always track who you are, and that it makes your life much better. So it's interesting how science fiction kind of makes us think of things. But being an economist, I'll bring a different angle to this, and that is of principles and trade-offs. So in privacy, I think we have to think of the following 3 principles. First, privacy is a public good, meaning it can be at risk of being underprovided by the private sector, meaning if a big tech, for example, knows a lot about a type of population, then you come along, and even if you're not part of that platform, you might be identified in terms of your preferences, and you might be discriminated even if you didn't participate in that scheme of that big tech platform. That's hurting some individuals, even if the other individuals that participated were willing to participate in that scheme, giving their data, like Mariana referenced. So that's the first principle. The second principle is the fact that there's a trade-off between privacy and customization. So the same reason that you want to willingly give your data to this, for example, big techs, is because you get good ads, good services, and the like, right? So this is potentially a problem. And the third is the fact that people undervalue their privacy for some behavioral reason. So when you survey them and they say, like, yes, I love privacy, but when you actually measure the reveal preference, for example, in experiments, they give their privacy for nothing, right? So I think that's the environment in which central banks and privacy regulation has to look very carefully on how to implement the privacy regulation on CBDC and stable coins.
Absolutely. Marion, do you also want to mention something about that?
Yeah, I'm going to jump and to follow up on what Francisco said. I think there is a real trade-off between privacy and efficiency. So we love our privacy, but we want the government to be able to trace illicit transactions. If there is some money stolen, we want the money back, and so to be able to find who stole the money. And there is always a trade-off between privacy and convenience. And I think we love privacy again, but if something is extremely convenient, we are very happy to leave our privacy. This is the case for Google Maps. This is the case for Facebook. This is the case for LinkedIn. This is the case for everything, basically. And we are very happy to install all the apps on our smartphone, at least for most people. And this is something that there is a real trade-off. On your specific question about CBDC and cryptocurrency, so CBDC, it's not far in China, but it's pretty far for Europe and for the US. And I wouldn't be surprised if cryptocurrencies are getting more and more widespread as a means of payment over the next few years. And I could see having an omni-channel means of payment with several currencies, tokens that we could pay with. Having said that, I don't think any crypto will replace the US dollar or the euros or whatever. I'm an academic person as well, so I trust the public sector, I trust central banks, and I would rely on much more on a CBDC rather than a mean of payment which is created by we don't know.
Oh, excellent, Marion. In general, I want to thank everyone, Francisco, Thomas, Mariana, and Marion, to express your opinion, because it is highly valuable and absolutely a necessity to get the market to the next level. And hopefully we can debate about this a lot more.
Thank you.
Thank you.
Thank you.
Thank you.
And I'm wishing you a wonderful day, everyone.
Bye.
You too. Bye-bye.